The IRS is going to audit you. Obviously, if you do some claims, if you actually claim some expenses, specifically start with the number of miles. For example, if you claim 7,000 miles, immediately it raises a red flag with the IRS because it's impossible that you drive a flat number of miles. It's impossible. Many people say, okay, 7,454. No. If you say 7, okay, 7, 4, and 5 are close. So that is already fraud. The IRS knows that you are making the numbers because there is a statistic technique that says, and this is statistically proved, that people usually, when they are making numbers, they put the numbers that are next in the sequence. So if you say 7,454, 53, they know that it's not true. It's 4, 5, 4, 5, 3, 4, they know it. So don't try to cut corners. It's just funny.
Wow.
Just, use IQ Mile. Use IQ Mile, that if the IRS send you a letter, you send them by email, or you print it when it's in the IQ Mile, you print it, and then you send it. IRS still is not receiving any correspondence in emails yet. Some states like California is allowing taxpayers in emailing letters and documents, but the IRS is not yet there. California is actually working. It's one of the more progressive states. But then the IRS is not yet there. But then try to always document, what is called in auditing, substantiate your claims, whatever you're claiming. Now, there is no anymore an excuse, because before is to say, no, it's difficult, no, we don't have how, now you do. So there's no an excuse anymore. And being that you are so techy, and you love technology, then why not? Why not use it? Why not put my life in order? Why not knowing what I'm going to do for the next month, and how much I'm going to make for the next month, and how much I'm going to spend for the next month? Wouldn't that be nice? Wouldn't that be stressless? Right? It's like, going to a school. You never have to worry what class is going to be next. Never. The system works like a clock. Same thing. You don't have to worry where you have to go tomorrow, what you have to do. You just need to use the schedule. Use Google Calendar. And then schedule your days, or your week, or your month. And then you don't have to think anymore what's going to happen. And when you do that, also schedule, if you are the self-employed individual, schedule the payment of taxes as well. And I'm going to show you how to do the payment easily through the internet. There is also the problem with home office deduction. Now, this is one of the things that many people like to claim. The only way when you can claim home office deduction is that if you actually have a room that is exclusively dedicated for an office and you are making money. If you are not making money, there's no way in claiming an office deduction. If you do, the IRS is going to audit you. And if you want to claim it, go for the easy one. Don't claim the full amount. Claim the standard amount, that is $1,500 per year, and then save some audit possibility. You want to get audit? Okay, fine. Then claim miles 7,500 flat. Claim the full amount of the home office deduction. That is a recipe, a good recipe to receive a letter, probably by October or the next year. But it's even worse. You know why it's worse? If you are only the same year, it's good. Well, it's not good. But at least you are not accumulating penalties and interest. But if you're audited the next year or 2 years later, you are accumulating the interest And the penalties for 2 years. And I've seen that, even for 3. Because the maximum amount that you have to, that the IRS can audit you is 3 years. So 3 years from the last tax season. So for this tax season, they can audit you. For 2015, they can audit you till 2018. For 3 years, for 3 tax seasons. It's not for years, actually 3 tax seasons. So we are just close 2015. So if you want to avoid all this stress, if you want to avoid all this stress, it is good that you use the advance of technology. And then you are either one step ahead of the IRS, and you are scheduling and living orderly with all the numbers. It's also a mistake that you have to avoid is if you claim your car, do not claim depreciation for the car. You only claim the mine. Many accountants, they like to involve in creative accounting, in creative deductions, and they claim the miles and also claim depreciation for the car. So it's like double dipping. Doesn't make sense. I either claim one or the other, not both. Now, remember, when you are doing business, you are supposed to make money. Otherwise, why you are doing in business? What is the objective of me doing plumbing, doing electricity, if I am not making money? When you have a loss in your business, it means that either you have give money to the business yourself, or somebody else has given to the money to the business. It means that you have to fund the business with your own money, or you have borrowed the money from somebody. That is a net loss. A net loss means that you have to use money from third parties or from yourself to allow the business to keep working. A net loss means a decrease of your personal capital. That is a net loss. So it's not possible that if you have a loss, I mean, if you have a business and that business is not giving you profits, then it's not a good business. So the IRS is not going to believe that you have consistently a loss through the years. That doesn't make sense.
Okay, for a few years.
Yeah, only it's a habit. The IRS, the next year the IRS is going to ask you how is that you are living, first of all. You have to prove, okay, how is that you are living? Okay, I have an aunt in Connecticut who is giving me money. Okay, fine, but you have to prove that. You don't have to report that. Gifted money is not reportable to you. You don't have to pay that. It's the other person. So if you gift somebody who is not your husband or your wife over $14,000, you have to pay gift taxes. That is separate from income tax. So you have, this is income tax. We also have gift taxation. Anything over $14,000 is taxable at 40%. So if you are going to give up a property and you want to give that property to your son or to your family or to a relative, if the property is over $14,000, the difference you have to pay in tax. For your spouse, no. Spouse is unlimited free. But for gift tax, this is real. So how is that this comes? This is where tax planning comes handy. And if you see, all of us expect to make money in the future, right? All of us expect that the stream of money increases in the future. Therefore, if we have that expectation, it's even more critical that we take the things orderly, that we have a plan, a personal finance plan, financial plan, and within that plan we have a tax strategy, a tax planning strategy. It's part of the requirement if we want to become, if we want to say that we are successful individuals. It's like you have insurance, you are studying for a career, and then one day you are going to start using that knowledge to make money. Or if you are using it now, even better. But then to become a professional, it has taken time and knowledge, effort. So there is a plan for you to become a knowledgeable individual. So you study many subjects, and then you become someone in terms of knowledge. And the university is certifying that. Same thing applies with your finances. There is a process that we have to follow with the objective of becoming proficient, becoming knowledgeable individuals. And we become knowledgeable in terms of university, in terms of college, when we pass grades. We pass the courses and then we get some grades. Same thing applies to our life personally. So, if we want to assure ourselves that stay out of trouble with the IRS, keep all these notes in mind. Do not claim your miles, the ones that are not. Do not give your accountant the power of decide what are the deductions that you are going to take, or what kind of income you are going to declare. And I have seen this in many cases. Clients come with problems, and the first thing that I ask them, do you know what you signed? They say no. Do you recognize the numbers? No. Oh no, my accountant did it, the tax preparer did it. And this is something systemic. It's coming to the point that it's systemic. I have at least one or two people in the tax season in a week with these problems. So make sure that you are proactive, that you do the numbers accordingly, and do not allow anyone setting the limits, or the minimum, or the maximum, so how much I want to pay, or how much I don't want to pay. Because that is going to create trouble in the future for you. And that trouble is going to make what? It's going to bring what? It's stress. And now that we are young, we can deal with the stress, but the effect of stress in the body, when after 40 or after 50, you are going to feel it. It's going to be real. Your blood pressure is going to increase, cholesterol is going to increase, your immunological system is going to be affected. These are real. This is scientifically proved. It's scientifically proved that the effect of all this non-preparedness is going to take a toll in your body. So, to anticipate all that, keep all these things in mind, and try to be proactive. Start at least with something. Do something that it gives you the ability to live better in terms of stress. What is that thing that you are dealing with? What is that thing? What do you need support with? That thing that you are fighting for, that you are not capable enough in your spirit to deal it yourself. So when you recognize that weakness, that moment you become more than the weakness. And then you need support. That is what the accountants, the financial advisors, the financial planners are for. See, finances is difficult, so you cannot deal with that yourself. But you can. The reality is that you can. You can with apps, Quicken, Mint, QuickBooks. You can with that. IQ Minus, you can do that. You can. But it's a time. You have to take time. Same thing now. You have ID the need, where you have that need, and there are professionals for that. So ID the need, the same thing as you ID your weakness, and then you go to the pastor, you go to the apostle, the prophet, to try to find comfort and help. Spiritually. Physically, same thing. Materially works the same thing. You ID your weakness, then you go to the doctor, or you go to the accountant, or you go to the personal finance, or you go to the insurance, or you go to the psychologist if you need therapy. It's exactly the same thing. we have to be honest enough to admit our weaknesses, either spiritually, and pray and look for comfort and support with the elders of the church, or in the case of our personal life, work with professionals. When you get sick, where do you go? To the doctor, right? Because you have recognized that you are not feeling well. But then you are taking the toll on your health. How you do it with your finances? When your pockets are not good enough to cover your expenses and you are constantly using credit cards. At that moment, you have a need. You need help. So at that point, professionals can help you. Mentors, financial advisors can actually help you. And it's not being weak for doing that. Actually, it's like, oh, I don't go to the doctor because then people will think that I am weak. Who does that? So it's the same thing. The professionals, same thing like the pastor, the apostle, they are to help you. Professionals are exactly the same, to help you. So, let's be also professional. And admitting that we need help. Doing that will save you from this, from a letter from the IRS that is going to give you an audit. This is the objective. You know, it looks big. Oh, I don't want to go to that guy because then he's going to judge me. And if he's judging you, your image, nothing that others think about you is real unless you make it real. Nothing what others think about you is real unless you make it real. Now, if you have the same opinion than the other person, then is where you have made it real. But if I say something and you don't believe it, if I say this and you don't believe it, then that is real sad. Because then, remember, this is real. The IRS is come after you. So maybe this is the only thing that we cannot say that, but then the IRS is going to come after you. Remember, so this. But remember, one of the things that sometimes we don't like to look for help is because we feel judged, or our self-esteem is going to diminish, or our self-image is going to be compromised. But remember, it doesn't matter what others think because they don't believe in you. It only matters when they believe in you. That's why it's so important, the elders in the church. They believe in you and they are to help you. Same thing with professionals, remember. Otherwise, we're going to be sitting here, oh, why I'm doing this, why? It's because this is why. This is why people get into trouble. They do this. Let's go with the next one, please. Now, a way to solve the problem is doing quarterly payments. This is only for self-employed individuals. Self-employed individuals, they do not pay taxes, but until the end of the year. So to solve that problem, we can do taxes, we can do payments quarterly. If we are self-employed, how much you paid last year? Say that you paid $2,000. Therefore, you divide the $2,000 into four payments, and you go to the IRS website, and it's easy. You go to the IRS website, quick payment, and then you pay $500 every quarter. You pay it in April, you pay it in July, you pay it in March, you pay it in June, you pay it in September, and then you pay it in December, and then you will be fine. This is as easy as Social Security, bank account, and ABA number or routing number. That's all what they need. It's not like you have to create a profile and then set a password. No, nothing like that. It's just go IRS, quick pay, irs.gov, quick pay, and then you pay there with your Social Security, check, account number of the bank, and the ABA, or the routing number. What this is good for, when you file your income tax after January 31st, you get penalized if you have not paid taxes during the last year. Okay? And the larger the amount that you have to pay, the larger is the penalty. So if you don't pay taxes during the year and you don't want to pay a penalty, then make sure that you file taxes on January 31st and you pay in full that month. If you do not pay taxes through the year and you file after January 31st, you are going to get penalized. Maybe the penalty $125, $225, depending on the amount that you are paying in taxes, but you are going to be penalized. So make sure that if you are not paying taxes during the year, you file before January 31st. Obviously, now it's too late. It's already passed. So if you work by yourself and you receive a check instead of a check for the full amount instead of a check for deduction, make sure that you file before January 31st if you do not do any payments during the last year. So make sure that this is, you do that, or you go payments quarterly. And if you pay $1,000 a year, then pay $250 each quarter. If you pay $3,000, $4,000 a year, then divide that amount into 4 and they pay quarterly going to this website. Why is you say, okay, sometimes you'll say, okay, no, I don't want to pay much money. I want to pay the lease. And then how do I pay the lease amount? People will say, okay, claim this, do that, put this, the uniforms, more miles, claim the house deduction, and all kind of creative things. But remember, this is going to affect you in terms of Social Security and Medicare. Medicare you will have, because every US citizen and resident when the retirement age is going to get Medicare. That's it. You don't have to worry about Medicare and your health. But you have to worry about retirement pension. That is what you have to worry. So the least that you pay, or the lesser that you pay, same thing, the lesser you are going to receive in retirement. Remember, you need 40 credits accumulated in Social Security to be able to retire. 40 credits through your work life. This could be in a interrupted period or periods that are not equal, not even, but you have to have 40